Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, couple things to go over. So number one, we just got the jobs report out. The data is in, and it is better than expected on the headline number. Let's take a look. We can clearly see here non-farm payrolls coming in at 139,000. That was better than the 125,000 that the estimates were calling for. Last 2 months, though, and this is the kicker, guys, and I know many of you guys have always said this, the headline numbers come in strong and then they revise it the next month or two. That happened again. The last 2 months revised down by a total of 90,000 jobs. I mean, we're not talking about 10,000 or 5,000 jobs here. We're talking about 90,000. So again, sure, 139,000 jobs sounds great, but what will that be revised down in the coming months? 50,000, 60,000? Ultimately, we'll find out. But this is the kicker. As much as these numbers may be kind of faulty on the initial headline, the markets react to them. And so as a trader, I have to react to that. I have to look and say, okay, well, if markets are trading up, I can't be like, oh, well, they'll revise this number down, so I'm going to do this instead. No, the markets are doing what they're doing. My job as an investor or trader is to take that into account and follow what the charts are telling me. All right, couple other things. Unemployment rate stayed steady at 4.2%. The key here, the one little sign of weakness aside from the revision down, the participation rate falls slightly. Now, a lot of people don't pay attention to the participation rate. The kicker here is this. The participation rate is important because it shows how many people are saying, you know what, it's too hard to find a job, I'm getting discouraged, and I fall out of the workforce. I stop looking for a job. So remember, the unemployment rate shows us who is actively looking for a job. If someone was looking for a job and then falls out and says, you know what, I'm going to stop looking for a job, they're not counted in the unemployment rate, but that's the participation rate. Okay, so that's important. The other note here, hourly earnings up 0.4%. That was better than expected, but that can also be a small inflationary sign. When people have more money, they can tend to spend more money, and that can be inflationary. All right, let's flip over to the charts here and take a look at what is going on. So first and foremost, what we're seeing is the S&P futures are up about 0.8% here. You can see that right here at the top of my screen, right up here, up 0.79 right now percent. And you can see here on the daily chart, you have a nice green candle. Now, if we go to the daily chart, the intraday chart, this is where the jobs report came out. So you can see overnight, we were kind of trading down near the lows from yesterday. And by the way, what a drag down, ugly fight that was between Elon and Trump yesterday. If you were like me and the other traders, we were literally just watching X, watching Twitter, and just watching for the next tweet to come out. I mean, it was just nuts to watch. And obviously, it cost the market gains, right? We saw the market basically once this started, the markets were trending lower. A lot of that, by the way, was because Tesla stock was just getting absolutely annihilated. But overnight, they both calmed down a little bit, and the market started to float back up. And then this morning, here's where the jobs report hit, and you can see a nice pop on that. Not a huge pop, because again, I think that smart money is saying, hey, listen, they're going to revise these numbers down. The participation rate was lower, which isn't good. Those type of things are a little bit problematic. But for the most part, this just tells us that the economy is not falling off a cliff, right? The jobs, the labor market is still hanging in there, albeit getting weaker over time. So again, we popped on that. We've kind of stalled out here just a little bit. The key level I'll be watching, if we go to the daily chart, there's this new level on the ES futures right here, the S&P essentially, this low pivot right around just above 6,000. That'll be something I watch very, very closely. Now, I know most of you guys don't follow the ES, so we're going to flip over to the S&P futures, but essentially it's much the same here, folks. You can see this low right here, basically yesterday's high pivot, right in this vicinity. We're continuing to watch. And again, we had that zone that we were following as well, right? So the zone anywhere between here, right across, and down to about here. That's that zone that we were in here, pulled back, hit it again, pulled back. Here we kind of closed on it. Look at this, guys. Closed on it, opened above, but then came in and then opened above again and then fell back down. So again, this is right around 59.70. Are we going to kind of stall out today, or will we push up and test the 6,000 level on the S&P 500? All right. One thing I will say, folks, is that the markets remained resilient. So yes, yesterday the markets rolled over because Trump and Elon Musk were just going at it like crazy. I mean, just the mudslinging. I mean, it was just nuts, folks. Again, I'm sure everyone at this point has heard and read all of the tweets and such. But the key here is the S&P was not down that much yesterday, considering. And I still think that, again, we're still seeing people that are willing to deploy capital in the markets. And today we're seeing that resumption in upside in the markets, at least early in the day. Now, today I'll do a weekly market wrap up at the end of the day going into the weekend. So stay tuned for that. And I'll bring you guys that live at 3:55 p.m. Eastern time. Okay. So back to the charts we go here, guys. And again, let's flip over to the QQQ. The Qs are up as well, but not back to yesterday's high. So I'm going to keep an eye on that. If we continue up, your next resistance on the QQQ is going to be your all-time high double top. That should be a technical resistance. You guys know that we are coming into a cycle date in the mid-month period. So a little over a week from now, we'll be entering what we have calculated out to be a cycle date, meaning cycle dates, by the way, are pivot points oftentimes in the market. It's where certain things kind of all mesh together at a specific time frame, and there tends to be a reversal in trend. So that's one of the things I'm watching for, and I'm also keeping an eye on the fact that we're getting close to all-time highs. So I've speculated before with you guys that maybe we push up into that cycle date, we pierce the all-time highs, which stops out the weak-handed bulls, the bears that had stops right at that all-time high break. And then we pierce it, you get the last few bulls on board, and then the markets may come in. So we're going to watch to see if that happens. And again, that would be not necessarily next week, but really the following week after that, I'd be paying attention to that. Again, as we get into the 15th, the 17th, 18th, 19th of the month this month. All right. Couple things here, guys. Let's go over the US dollar. The dollar is bouncing this morning, so we are seeing a little bit of a bounce back above. Notice how the dollar is bouncing around. So it closes below, closes back above, closes below, but doesn't confirm, right? It would have had to close below this low here to confirm. It didn't confirm, and they're bringing it back above. So it's dancing around this level, but we have yet to confirm a technical breakdown in the dollar below this trend line. In addition, the 10-year yield, which broke down here, still unconfirmed as well, is doing a retrace back to this line. That should be some resistance, but the 10-year yield is rallying today. Now, why would the 10-year yield be rallying? Simply put, the jobs data was stronger, at least the headline number, and that, again, means that the economy is not falling off a cliff. So yesterday we were thinking, oh, well, the Fed may have to cut a lot of times into year end. We were already seeing an expected cut in September. It's still looking like we'll get a cut in September, but maybe not as many cuts as the market was anticipating. So yields are rallying up in response to less potential cuts in the near term. All right. So that's really what it is. The 10-year yield essentially gauging how many cuts we're going to get from the Federal Reserve and when we'll get those. Tesla. Wow. Yesterday, I think it was its biggest drop in the history of Tesla. Epic 14% drop. At one point, it was down, I think, 18%. Look at how it came into this level right in here, right? So again, all that panic brought it down. Look at all this high area and this high area. It comes right in there. Today, it is moving higher in the pre-market. So again, basically what we saw overnight is Elon Musk kind of stepping back and, basically agreeing with some posts on X saying that, oh, maybe you guys should just take a break, get over this for the sake of the country, etc. And he kind of agreed with those. And so we did see Tesla stock bouncing back a little bit on hopes of optimism. But keep in mind, guys, if today anything happens and this starts up again, Tesla stock could go back into a free fall because, again, there's a lot of government contracts that Tesla, SpaceX, a lot of these other companies have. And if Trump decided to just cancel them, which he does have, I think, the authority to do, then that could be a big detriment for Tesla stock. One little side note that's interesting, there were more puts bought on Tesla yesterday than I think at any point in history in one single sitting. And when everyone is buying puts, the stock tends to go the opposite way, right? Because the institutions that are selling those puts, they don't want to pay out those options holders, those put options. And so a lot of times you'll see, especially when they're expiring today, let's say, they will push Tesla and keep it afloat to make sure that those options expire worthless. And then if it falls again next week, they don't care as much, right? They don't have to worry about that expiration until the next Friday, the weekly options in general. Okay, so other stocks in motion, Broadcom selling off on earnings, only a little bit here though. But again, I think I went over this with you guys yesterday. Extremely extended chart going into earnings. I think I even used the analogy yesterday that, to continue going up, Broadcom would essentially have to cure cancer. And obviously they weren't going to do that. And so it's just a situation of where the earnings were very good, but the stock has rallied so much going into earnings that expectations were basically unattainable. And so the stock is just seeing some natural profit taking. Now, notice right here, this is where your support area is. Again, if we look at the pre-market, it kind of already got down yesterday after hours to that level. So I'm not really interested in buying down here. It's not a big enough correction. If we did fall into this level today, around 233 to 234, yes, I would day trade this. I wouldn't swing trade it, but I would day trade this around 233 to 234. DocuSign is getting slammed today. Look at that drop on DocuSign, closing yesterday around $93, trading at $75 today. If we flip over to the chart, there is a gap fill at 74.25 that could be an opportunity for a day trade. I myself am going to more focus on the $72 Pierce, which is another gap fill, but the stock would be a little bit more oversold. So for me, at least the 72 area, I'll be eyeing a little bit closer as an entry on a short. And then obviously we all can see this pivot low down here at 67.50, which would be a significant level as well. So again, 72 and then 67.50, those would be my two key levels that I am watching today. Lululemon slammed, guys. And again, Lulu basically reported inline earnings and revenue, but they warned on their future guidance. So they basically lowered expectations. They basically said, hey, guys, tariffs, we make pretty much everything out of the country, so tariffs are going to hammer us. In addition, margins are getting squeezed as the consumer is being more selective. And all of this causing Lulu to just crater. I mean, this was pretty remarkable after hours yesterday, how it didn't have a bounce until it was down this much. And even then, that's a very small bounce. You're seeing a little bit of a float up here into the open. In terms of where this would be an opportunity, I'm going to be looking at this level down here, 253 gap fill. And then just below that, 248 to 247. So once you get down into this range, there should be a lot of technical support right in this vicinity. So again, once you get basically below 253, all the way to about 242, that'll be a huge zone of technical support on Lululemon for a potential day trade long. Now, again, what about a swing trade? For swing trade purposes, I got to go lower, guys. At minimum, down at this low, down around 227, and then I would reevaluate if it comes down there to see if I still do like it. All right, so again, we've looked at Tesla. We've looked at some of these big movers here. Quickly just going over some of these other plays. NVIDIA here, guys. NVIDIA is up a little bit today as well with the rest of the market, but it's still stalled out at the highs from earnings. So this was on the earnings gap up. We opened up. We pushed up into this pivot top here, and then it pulled back. Then we retested yesterday, pulled back. If it breaks through here, this level is your next stopping point at around 149. And then obviously, if it continues through, the 153 level will be your all-time high double top. This one would be a very interesting level if it gets up there in the next week, especially going into that cycle date. Be very curious to see if it's able to kind of handle that. Taking a look at Meta Platforms here. Meta Platforms is an interesting one, guys. You have this long-term uptrend trend line, and notice where we are. We're right up in that mix. So I'm curious to see, do we continue to push up on Meta? If we do, look at this gap fill right here at around 715 to 716. But right now we're dealing with this little zone, this upsloping was support, 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 support. And then you can see we broke resistance, pulled back, resistance, pulled back, kissed it, pulled back. Now we're piercing it, The question is, can it get through or does it get rejected again? We'll watch and see where that goes. And then Microsoft, guys, Microsoft is now basically at its all-time high. Impressive move up on Microsoft. But again, it is now piercing double top, which again, I'll be watching closely. You can see Microsoft has really seen a vertical move after the earnings gap right here. They reported earnings. The stock was closed here, then opened here, and is ground up nonstop. It is coming into a very good resistance, and it is overbought significantly. All right, so we'll keep an eye on that. Bitcoin had a good flush yesterday on the back of the stock market rollover, but look at today. It's rallying right back. So again, it started to break down below this level, and now it's getting saved. Let's watch to see where it closes today. If it closes today below 103,000 right here, then I think it continues down. If it can somehow recapture this zone, then it's okay. Then it could float back up a little bit. But again, very interesting. Notice again, Bitcoin's rollover and the stock market was falling yesterday. All right, today the stock market is rallying back. Bitcoin is up. And the reason I bring that to your attention is that, we have to be aware that Bitcoin still is mostly a risk asset. So therefore, again, market fell yesterday, Bitcoin falls today up, Bitcoin up. And again, I just point that out to be sure everyone's fully aware. Next up, let's look at gold. Gold today, flatlining here. This continues to be a bullish pattern on gold, so be aware of that. As long as we don't go back below this line, this remains bullish with an upside bias. All right, but again, this continues to make a bull flag. Upside bias remains intact. Silver continues to go higher. Beautiful move. I am still holding my SLV long position, which is the silver ETF with smart money commodity members. We are well over 10% in the money at this point from our entry, so that's awesome. And again, I will be looking to potentially grab some off the table today, though, as it continues to move up. But great move on silver today, folks. Fantastic continued move. I have an upside target, by the way. This is kind of where I think it's going to really meet resistance, right around 37. So 37, when we're, in all fairness, we're trading at 36.30. So it's about 70 cents, potentially more upside. And then we'll start to see if silver can battle the sellers at that level and continue on. Looking here at the oil trade, oil today is back up a little bit, still not doing much. You might have a small bullish pattern, bull flag. See this green candle and then these inside bars. So we might get our wish that oil gets up to this level where I would then decide if I wanted to short oil at that point. So again, going to keep a very close eye on that one on U.S. oil. And then lastly, natural gas here. Nat gas is basically chopping sideways. Same sort of thing. Maybe a small little uptick. Green candle inside bar could be bullish in the short term. This would be major resistance right up here, right around 410, 411, depending on where that trend line is if it hits. All right. So, man, I'll tell you guys, yesterday we started out with jobless claims. We started out with a Trump and Xi phone call. The markets were really excited about that. Like, okay, we're back on track with China and kind of these lower tariff levels. And then all of a sudden, it was insane. All hell broke loose. And then after hours, we got Broadcom earnings. And then, overnight and this morning, obviously coming into this morning, and we got non-farm payroll. So this has been an exhausting week for those of us that are traders. But at the same time, it has been a great week. So again, folks, if you're in the live day trading room with me yesterday, we just knocked it out of the park. I think we had 10 trades. Really, we made almost 20K on yesterday's trading session with members in the live day trading room. So let's do it again today. It's Friday. My goal is to have a few good winners here in this morning. Remember, we have single day. You can come in just for one single day and see what it's like, or a week. And then if you like it, you can always sign up for the monthly as well. And don't forget, folks, smart money stocks and ETFs. Awesome stuff there. I do daily videos, deep diving, way more in depth than these game plans in those, plus give out exact entries and exits. I have an options service now, so you want options trades, I've got that. And we also have commodities and crypto as potential services for you guys. So really, it's everything you could possibly ask for. But remember, it's all from a technical analysis perspective, and that's the key, folks. No nonsense, no hype, trading the charts. That's what we do. You guys have a great weekend if I don't see you. Otherwise, I'll be back for the weekly wrap-up later today. Have a good one. Take care.